You're dreaming of financial freedom, maybe a comfy retirement or a dream vacation, but your savings are stuck in a single stock or a low-yield account, and a market dip wipes out your gains. I've been there, sweating over a $2,000 loss in one risky bet, heart pounding, feeling like I'd never get ahead. But then, I learned how to build a diverse investment portfolio, spreading risk and growing $10,000 into $20,000 in 5 years. So, stick with me for how to build a diverse investment portfolio. I'll share a step-by-step plan, real data, and stories to help you invest smarter in 2025. By the way, this could be your key to steady wealth, so don't click away. Hey, I'm Bill, and investing used to scare me. Too many options, too much jargon. But after losing money on a single stock, I embraced diversification and turned my finances around. In 2025, with inflation at 2.7% and markets averaging 7% returns, per Vanguard, a diverse portfolio is your shield against volatility. So, today, in How to Build a Diverse Investment Portfolio, I'm breaking down a 6-step plan, backed by experts like Morningstar and my own wins. If you're a beginner or looking to grow wealth safely, let's dive in. So, why diversify? Threading investments across asset classes, stocks, bonds, real estate, cuts risk. Per Morningstar, a diversified portfolio lost only 10% in the 2022 crash versus 25% for single stock bets. A $10,000 diversified mix at 7% can grow to $30,000 in 15 years, per Fidelity. Emotionally, it's peace of mind. I slept better knowing my money wasn't tied to one outcome. By the way, you don't need millions. These steps work with $500 or more in 2025's accessible platforms. Hold up, did you know diversification could save you 50% of losses in a market dip? If you're excited, comment "Diversify now" and let's build your portfolio. Here's your 6-step plan to build a diverse investment portfolio in 2025, with timelines and real examples. Step 1. Assess your goals and risk. Week 1. Define your timeline, 5 years, 20, and risk tolerance. Younger investors, under 40, can lean aggressive. Over 50, prioritize safety. Use Fidelity's risk quiz, takes 5 minutes. I aimed for retirement at 60, choosing 80% stocks, 20% bonds. In 2025, apps like Betterment assess risk via AI. My friend Sam, 35, picked moderate risk, growing $5,000 to $7,000 in 3 years. If you're cautious, start balanced. Step 2. Choose asset classes. Month 1. Thread across stocks, growth, bonds, stability, and alternatives, real estate, ETFs. Per Vanguard, a 70/20/10 split, stocks, bonds, other, averages 6.8% returns. I invested $3,000 in S&P 500 ETFs, $1,000 in bonds, $500 in REITs. In 2025, platforms like Schwab offer 0.04% fee funds. A coworker diversified $10,000 across ETFs, up 20% in 2 years. If new, start with index funds, low cost, broad exposure. Step 3. Select investments, months 1 to 2. Pick low-cost index funds like Vanguard VTI, 0.04% fee, 7% AVG. Return, for stocks, BND for bonds, 0.03% fee, 4% return. Add REITs via Fundrise, $500 minimum, 8% returns. I put $2,000 in FXAIX, $1,000 in BND, up $800 in 18 months. Avoid single stocks. 2025's volatility hit Tesla hard. A friend lost $1,500 on one stock but recovered with ETFs. If unsure, robo-advisors like Wealthfront diversify for you. Step 4. Allocate and rebalance, months 2 to 3. Set percentages, 60 to 80% stocks, 15 to 30% bonds, 5 to 10% alternatives, per age. Rebalance yearly to maintain, sell high, buy low. I rebalanced $5,000, boosting returns 2%. In 2025, Betterment's AI rebalances automatically. Users gain 1% extra yearly. My cousin's 70/20/10 portfolio grew $3,000 in 2 years by rebalancing. If hands-off, use target date funds, they adjust automatically. Step 5. Automate investments, month 3. Set up dollar cost averaging, $100 per month into ETFs via Fidelity or Robinhood. I automated $200 per month, hitting $7,000 in 3 years. In 2025, apps like Acorns round up purchases for investing. Users add $50 per month. A colleague automated $150 per month, growing $4,500 in 2 years. If cash is tight, start with $25 per month. Consistency compounds. Step 6. Monitor and adjust, ongoing. Check quarterly. Apps like Personal Capital track performance. Adjust for life changes, marriage, kids. In 2025, AI tools like Empower predict returns. Use them. I shifted 10% to bonds at 40 for safety. A friend adjusted post-job loss, preserving $10,000. If markets dip, stay calm. S&P 500 recovered 20% post-2022. Emotionally, seeing growth feels like building a safety net. These steps, followed consistently, can grow a $10,000 portfolio to $50,000 in 20 years at 7% per 2025 data. Wait, if you're nervous about risks, don't stress. Next, I'm sharing mistakes that tank portfolios and how to avoid them. Drop a thumbs up if you're ready to invest smarter. So, what ruins diversification? Mistake 1. Overloading one stock. 20% plus in one company risks losses. Cap at 5%. I lost $1,000 on a tech stock. Mistake 2. Ignoring fees. 1% fees cut $30,000 from a $100,000 portfolio over 20 years. Mistake 3. Panic selling. Markets recover. 2025's volatility tests patience. Mistake 4. No emergency fund. $1,000 to $5,000 prevents selling low. Mistake 5. Set and forget without rebalancing. Drifts cost 1 to 2% returns. By the way, I skipped rebalancing once, losing $500 in gains. Don't repeat that. Avoid these, and your portfolio thrives. If you're investing, how do you stay motivated? Picture your goal. Mine's retiring at 60 with $1 million. Track monthly. Personal Capital's charts make gains exciting. In 2025, AI like Wealthfront forecasts growth. Use it. Share wins on X. My $10,000 milestone got 200 likes, fueling my drive. Emotionally, diversification isn't just safety, it's confidence in your future. In How to Build a Diverse Investment Portfolio, these steps, from asset allocation to automation, create steady wealth. I went from $2,000 losses to $20,000 saved, and you can too. Start with $100 today. If this helped, smash like, subscribe, and hit the bell for 2025 investing hacks. Share with a friend scared to invest, they need this. What's your investment goal? Comment below. Thanks for watching. Here's to your wealthy future.